All right. So without further ado, I present to you Miss Peggy. Miss Peggy has been in the real estate industry, in the commercial real estate space for more than 30 years. Her and I met at the investment conference when I went to New York. If you all remember, I went to New York for an investment conference and we were able to meet and connect. And her and I, we have been talking for the past couple of months, right? Just talking about collaboration, talking about how can we empower you, right? How we can empower women, we can empower the community. So Peggy, there are some attendees here who are not women. They're husbands. Okay. Remember when I told you that my women bring their husbands to the classes? Well, this is what we meant. Okay. Awesome. Awesome. All right, Peggy, you have the floor. Again, I'm going to give everybody about 3 minutes to get on camera. If not, I'm so sorry. You're going to have to watch the replay. Okay. Those are my rules. They're strict, but they make sense. Okay. Go ahead, Peggy.
Okay. Hi, everybody. I'm Peggy Beauregard. And yes, we do like cameras on because we build relationships. And the way we build relationships is getting to know each other. And as one of my friends says, we don't go to Starbucks and sit with our backs to each other. So we like face to face. And that's part of how we get to know each other. So thank you very much for being here. I'm really thrilled. I've been in real estate for years and years and years. I came up as a broker, and I was in the exchange world, which you probably don't know what that is, but there's a thing called 1031. When you want to build a portfolio of real estate, you do these things called 1031, and it avoids taxes. So part of being in commercial real estate or any real estate is you get tax advantages, which you do not get in the stock market. Mostly you get tax disadvantages in the stock market, particularly if you are in a mutual fund and somebody sells their shares, then you now have a capital gain whether you sold yours or not. So I don't like that at all. But what I do like is when you're in commercial real estate and you have invested, particularly as a limited partner, you get something called a K1, and that K1 offsets any income you got because there's depreciation. And my favorite is people start getting their K1s and I get all these phone calls. It's negative, it's negative, it's negative. And I'm like, yeah, that's great. So let me tell you a little bit about the different kinds of real estate. So there's lots and lots of real estate. I'm sure when you drive down the street, you see commercial real estate. You might go to a drive-in like Starbucks, get your coffee. That is a commercial real estate. If you live in an apartment complex, that is commercial real estate. If you've ever seen a mobile home park, or if you've ever seen an RV park, or you have some of your things at a self-storage, all of that is commercial real estate. And usually how that is put together is several people put their principal money into a particular offering and they buy the real estate together. So people like me who are limited partners, we just put our money in the deal. I don't have anything to do with the deal. I used to buy, I bought self-storages, I've bought multifamily. I've done several different kinds of property, fixed them up and sold them, or whatever ended up happening with them. The self-storage we exchanged into some other properties, and 1031 just keeps you going and building your portfolio so that you don't have to pay taxes. And when you die, there's a step up for everybody. And that means that you got a new price set on the property. So if you paid $100,000 for a property and when you pass away, the property's now worth $200,000, whoever inherits it doesn't have to pay any capital gain on it. So there's lots of advantages of being in commercial real estate. One of the advantages is you get some cash flow. So let's say you put $100,000 into a multifamily. They're going to fix up the property. They're going to raise the rents. They're going to make it a nicer place. And now they've raised the rent, let's say $25. So you put your $100,000 in and it was 10 units. And now the property's worth that much more because the rents went higher. When you buy a single family, that's very, very different than when you buy commercial. Commercial is always based on what's called the net operating income. So you have, let's say, a 10-unit apartment complex, and everybody pays $1,000. That's $10,000 a month. But then you have expenses, right? You've got the gardener that comes in to do the lawn. If it's got a pool, you've got a pool person coming in and cleaning the pool. If something goes wrong with the plumbing, somebody has to come in and pay, and somebody has to fix the plumbing. And you would have property taxes, and you would have insurance, and all of those are called expenses. So you have your $10,000 a month coming in, but you also have your expenses that have to be paid. So you have your income, your gross income, that's your $10,000. Then you have your expenses. Let's say that comes out to $5,000, 50%. That's a little high, but $5,000. And now you have $5,000 more to pay the mortgage, and then whatever's left over after the mortgage, that is what your cash flow is before taxes. It's the same when you're a limited partner. They do the same thing. You get that cash flow after the mortgage is paid. So you could do that on any kind of property, but you have to always think about what the income is, what the expenses are, and then what is that return. So I know you look into the stock market a lot, and the way the stock market works is very different in one sense and not so different in another. If you get dividends off of a stock, basically it's the same thing. It's whatever's left over after all the debt and all the loans that are on the property. Then whatever's left over, you get that dividend. And real estate is called cash flow. That's the only difference. And if you put in, let's say your $100,000 and you expect to get 8% return on that $100,000, you would expect to be receiving $8,000 a year. So in real estate, you would be expecting to get a very nice return of somewhere between, depending on what it is and how much work it needs, 8% to about 20%, depending on the particular asset class. So usually self-storage pays a little bit higher, multifamily pays a little bit lower, office pays a little bit lower, industrial pays a little bit higher. They're all a little different, but they're only like 1 or 2 points different. So if you go into a self-storage, you might expect to get a 10 or 12% return. If you go into multifamily, you might expect about an 8% return, although we have some that are doing a 20% return. If you go into, and I think I already said industrial, that would be somewhere around a 10% return. So they're all different. And the important part before you ever invest in commercial real estate is to do your due diligence. And how you do, yes, I like you shaking your head, yes. Doing your due diligence, what the syndicator sponsors send you is called an executive plan. And in that executive plan is supposed to have what the income of the property is and what all the expenses of the property are, what they plan to do to the property, how long that's going to take, and what your return is going to be. When I look at a property, I look at all those things. I have about an 80, I'd say about 80 checklist. I want to see everything because I need to know a lot of different things on it. I also look at what's called a rent roll. If you're in a multifamily property, and I don't know if any of you live in apartments, but in a multifamily, you have what's called a rent roll. It shows the unit, the name of the person, how much rent they're paying, what their deposit was, the last time they paid, if they're in a year lease or if they're in a month-to-month lease. And it just tracks what is, and if they got any special concessions going in. And of course, if they're late, then they track what the late fees are and how late they are. And almost every multifamily has somebody that's late, I'm sorry to say. So a lot of times they're collecting like 97 or 98% of the rent due, like that. I know it's a lot. I know I come out like with a fire hose, and I'm sorry that I do that. I've just been in the business for so long. I know so much about it. It's like you can't think about what you don't know. You know so much about it that it's like, okay, where do you start for step one? So the reason I like Q&A is because you guys probably are closer to step one, where I make my living off of and how I live. I only invest in commercial real estate. I don't invest in anything else. So I've been in it for a long time. I have something called a Roth IRA. I don't know if you guys have IRAs or if you know what a 401k and an IRA are, but I'm in a Roth IRA. That means it's after tax dollars, and everything that it earns inside the Roth is tax free. I also have a regular traditional, which I didn't know there was a Roth. So I still have a traditional, and everything I earn in it is taxable. So I like to do everything out of my Roth because, no offense to the government, and I know it needs help. I don't want to. I don't want to pay a lot of taxes to the government, but I do pay my taxes to the government, and I have to take, because I'm over 60, whatever it is, you have to take your required minimum income every year. So I have to take that from my traditional. So I am paying taxes to the government. Just want to let you know that I'm supporting everybody like I have to, as much as and you do have to pay taxes. If you don't pay some taxes, we expect all these services, and we're not going to get them if we don't pay our taxes. But frankly, I think the way the taxes are set up are pretty unfair. So I think that people like you who want to learn more should have the right to avoid as much as possible. And the government says you have the right to avoid it, and they have all these ways that you can avoid it. So jump in on the bandwagon and avoid paying taxes as much as you can. So that's generally it. I started off as an investor. I was a broker, real estate broker. I still keep my broker's license, but I do no practicing. We raise capital for a lot of different real estate. The idea was to help people, support people, and guide them into having a better life so that they understand, invest your principal, make it work for you. Do not spend your principal, invest it, make it work for you so that you always have money and you never outlive your money. It's very sad to hear somebody say, I'm down to my last $100,000 and I'm only 65 and I don't know how I'm going to make it. That's so sad, so sad. You can be saving your money every month in your Roth IRA and get it invested and have it grow, and take a cruise, a vacation, pay for your kids' college, show them how money works, like that. So questions, please. Everybody should have at least one question, because I'm sure that I didn't cover everything.
Yes, I'm going to start taking questions. So what Peggy just did was give you an overview of what the commercial real estate space looks like. But Peggy is a firm proponent of, right? It believes in you guys asking questions, because it is through the questions that she is able to teach. So I have questions that I have available for her, but I'm going to ask you all to ask questions, and then I'll take over if I need to. Okay.
Darlene had a question.
Yes, she did. Go ahead, Darlene.
Thanks, Peggy. My question for you is, how do you find the commercial real estate that you want to invest in?
Actually, they come to me. I go to a lot of meetings and I tell them I raise capital. So as soon as you say you raise capital, people say, please raise for me, raise for me, raise for me. So what we do is we want to vet those people out. We don't want to work with people that don't know what they're doing, which are people that are going into it for the first or second or third time. We want to work with people that have like 8, 10 years experience, that they've got somebody that comes to me and says, I've got 1,000 doors. I'm going to work with this is multifamily, they call it doors. I'm going to work with somebody that's got 1,000 doors because they know what they're doing, or they wouldn't have 1,000 doors under their belt. Does that answer your question at all?
It does, but when you say you raise capital, so you have a company
Yeah.
and you have a group of investors. Okay.
What I have is I have 6 or 8 people, sponsors that we work with right now that have multifamily or self-storage or some of the things I talked about, and they are looking for capital. I have a brochure, and I'm happy to send the brochure I could send it to Katiana, and she could send that out to all of you if you would like. So you could take a look at the different things in the way the brochure is set up. It shows you, it should show you where the property is, what state it's in, and then what kind of return you would get on it. Just gives you a little information. I've got the full executive plan if you ever really want to look at that. And if you want to set up, I could also come back at another time if you like, and I could do a presentation of one of our deals. And that would give you a little bit more education also. But today was the first time, so I just wanted to get in and holler out and see what you wanted to learn about. But I'm happy to have this conversation. Another thing that we do is we set up calls with families so that it's not just you and your husband, but it would be your children and your cousins and your sisters and brothers. And we set up a whole thing with the family so that everybody could be on the same page and
Okay.
support each other.
Okay, thank you.
Absolutely. Yes, we
So,
have Jocelyn. Did I say your name right?
Yes. So my question, which I posted in the chat, is you mentioned 1031 exchange, and you also talked about investing in your IRA. Do you have to 1031 exchange inside the IRA, or is it like only if you're doing it outside?
So 1031 is to avoid taxes,
Right.
and your Roth, your IRAs cannot do it out of you can't do it out of your IRAs.
So you still have to
Pay
do
taxes.
1031?
You don't pay taxes on it anyway. So let's say you went into a deal and you made a profit of $100,000. If it went into your Roth, you'd owe no taxes. If it goes into your regular 401k, you could have to pay taxes on it later.
Okay, so the 1031 is only if you're not investing in your IRA.
Right, if you have a savings account and you've started investing with that, and a lot of people like to build their portfolio, so they might start off with 2 or 3 houses, and then they'll exchange those 2 or 3 houses into 15 or 20 units, and then they'll take that and exchange that into something bigger, and they avoid taxes that way. They have to reset their depreciation. It's a little complicated, but it avoids taxes, which is what you want to do.
Right, agreed. I have another question.
Yes.
I've been asked this question before and I don't have the answer, so maybe you can help me get some clarity. I do have investments, real estate investment inside a self-directed 401k. So
Mhm.
people always ask me, why are you investing in a tax shelter inside a tax shelter? So my question is like, that's what I know, that's what I do, but I don't really, have an answer like what, it sounds like that's what you do too. So like, why would you invest in a tax shelter, like real estate already designed to be tax shelter inside a retirement account, which is another tax shelter?
Okay, so one of the answers is when I invest with many other people.
Mm-hmm.
What if they can't do a 1031? 1031s have all these numbers around them, like you have to close within 180 days. You have to find 3 properties that
Yeah.
you could exchange into. Well, guess what? If you're not out there looking before you close on your deal,
Mhm.
you have 45 days to identify. That's almost impossible.
Yeah.
Why would I want to go through all of that when I could do it in my Roth and never have to pay taxes, which was the
Okay.
whole point, right? Never pay taxes. Now, if you're in a 401k or you're in a self-directed traditional, you're going to owe taxes on that eventually. Here's the thing that I suggest you look into.
Mhm.
In 2 years, in 2026, the tax rules are going to change. Right now is a good time to start rolling your traditional into a Roth and pay the taxes that are owed now and use your Roth IRA to do your investments so that you avoid taxes. So avoid taxes as much as you can. Because every dime that you make, if you're in a 401k, let's say you have 100,000 in your 401k, and you invest it over the years and you build that into $1 million, you're not going to owe taxes on everything it made.
Right.
And you have to take money out. They tell you, because this is how the government is not your friend. They've set it up so that you have to pay taxes, right? And look at the tax bracket you'd be in if you had $1 million sitting there.
Yeah.
You'd be in a high tax bracket. So get as much money into your Roth IRA as possible. And
Yeah. I
make
didn't
sure
know
that you
that.
can still do it. If you make too much money, you can't set up a new one, but if you already have one, you can roll whatever you want into it. You just need to check with your tax advisor as to what will keep you out of the next tax bracket.
Okay. Wow. Okay. All right.
Okay.
Thank you. That's a loaded answer, but I needed, I wasn't even thinking like that. Thank you.
Yeah, most people don't think like that. So I didn't either. Nobody told me about a Roth. Like, why don't they tell you? Because they don't want you to know that there's a way to not pay taxes. Right? Yes, Robin.
I'm sorry, that's my daughter's Zoom name. I don't know how my children have literally changed everything on my iPad, but I'm Cynthia. But nevertheless,
Oh, Cynthia.
I was, yes, it's okay. So I had a few questions. What is the minimal amount that you would recommend? I know you don't work with newbies, but what is the minimal amount that someone, if they're interested, needs to have in mind as capital to get started?
Oh, I work with people who have money. I don't work with people that are just starting out to raise capital, if you understand what I'm saying. So a new sponsor who comes to me and says, I have 100 units and this is my first deal. I'm like, you have to prove to me that you're good. So most of the deals that we work on are a requirement of either 50,000 or 100,000. That's their minimum. Not my minimum, their minimum to invest in a property. So there's something called an accredited investor, and I don't know if you know what an accredited investor is, but accredited is if you make over 200,000 or 250 a year for 2 years in a row, or you already have over $1 million of assets, not counting debt. And some of our sponsors require you to be an accredited investor, and some of our sponsors do not require that. That's why we like to talk to everybody, because we have this wonderful, we love these people. You look at their executive plan and it doesn't look that good in one sense because they do a 60-40 split and they take 60, but they pay you 20% a year return. Like, I'm good with that. I'll take my 20% because then I could flip that 20%, that 100,000 plus the 20% into the next deal. And that's how you grow, right? You flip that 4 or 5 times, you get yourself $1 million. You're an accredited investor, and they don't care if you're accredited or not. Does that help any?
Somewhat. So just to clarify, you would need $50,000 minimally as far as being able to invest with your company.
Through our company. None of them
Through
are
your
ours. But here's the thing, you've got all these people here, develop relationships with them and put like an LLC together, and you could all put, let's say, because if all you've got's 50,000, we highly suggest you don't do that. You don't put everything in one deal. So let's say that as a 100,000 requirement, and there's and 5 of you could each put 20,000 in. You could put an LLC together, put your 100,000 in and start getting your return on that. And then the next deal, you could put a little bit more in and build it that way. So work with other people. And the problem with learning about real estate is there's just so much education needed before you go out and do something. There's so much you need to learn. You've got to learn all about lenders. You've got to learn about all the different kinds of loans. I mean, we have people that have gotten in so much trouble that came to us at the beginning of this year crying about the sponsors are asking for a capital. They want more capital. And like, why are they asking for it? Because they went into an adjustable rate mortgage and the rates went up. So now they need more to pay the mortgage. Like, that's one of my questions. Are you in a fixed rate mortgage or are you an adjustable rate mortgage? Because if you're in an adjustable rate mortgage and you're a sponsor, you are not protecting your investors. You're out. We'll never work with somebody that does an adjustable rate mortgage because you can't afford the adjustment. You can't afford to go up 2.5 points. That's ridiculous. And they didn't make sure that they were in the kind of loan that only went up 0.25%. Anyway, I'm sorry, I went off.
It's good. It's good
My
knowledge.
job's to protect our investors. That's to protect you. If you come work with us, we want to protect you and make sure you're good. So that's why I have an 80 point checklist, because it's super important to protect you.
I had two more questions. You said industrial. I'm gonna be honest, I'm not sure what you mean by that as far as
Okay.
industrial real estate.
So have you ever driven down, like, not on the main street, but behind the main street, and you see somebody that works on cars and has the carpet shop, and they have these little industrial groups with maybe 10 or 15 doors in them, and they're not on the front row because they don't need to be paying retail prices. They're back behind. They might be a warehouse, like Amazon's a warehouse, right? They put all their goods in. That's industrial. If somebody's
Is that
got
like the flower district in Miami when you go and they're like in the
a
back?
flower district, perfect. That is
Okay.
industrial, right? The garment industry, that's all industrial. Industrial is something that's not retail. It's behind, it doesn't usually sit on the front row, right? Because the front row always gets the highest prices.
And
Anything else?
lastly, would you consider duplex or triplex as far as a part of the because you mentioned apartment complexes, so I'm just trying to make sure I'm not lumping something into another category. Would you consider that a fourplex, a triplex, or a duplex as far as how you help those who come to you as far as investing?
Well, we would talk to you about that, but that is considered, that's under HUD 1 to 4 units. So you have to qualify for the loan. When you're in an industry, when you're in a commercial, you still qualify for the loan, but differently. The property has to qualify for the loan, if you get what I'm saying. So it's got 100 doors and you've got 90 of them filled up, right? You've got the income and you've got the expenses, and you could show that for the last 2 years to qualify for the loan. The property has to qualify for the loan, but they want to make sure you can pay for it. So you also have to have a good rating. But if you're in a 1 to 4, now you have to qualify for the loan because they don't consider any of the rent, or they might consider one of the rent. On a triplex, they might take one of the rents and apply that, but they don't really consider it any kind of commercial, even though it's income property. You have to qualify. You have to have the income to pay for all those units. Does that answer your question?
Got it.
You know, here's
Yes,
a really
thank
good,
you.
here's something really good for each of you. If you wanted to call one of your lenders and ask them to explain the difference, just tell them you're looking at a 10-unit apartment complex and you're looking at a duplex. What do you need to qualify for each of those? And they'll tell you what they need. And when they tell you the duplex, they'll have a stack about that high of what you'll need to send in, 2 years of returns, all your bank statements, your first kid's blood test, all those things. Whereas if you're buying a 100 unit, they'll want to see everything on the property and they'll want to see your credit report. And they'll want to see your financial statement too, so.
Before we get to Sarah, I wanted to kind of reiterate some very important gems that you dropped, and I want to make sure that everybody got them, okay? So the first thing, we'll talk about the last thing that you said, right? Did you guys hear that? If you're writing this in your notes, Peggy just said it is much easier to qualify for a commercial property. Why? Because the process is much smoother, because the property, like Peggy says, has to be the one that qualifies for the loan, not you and your personal stuff and all your money habits and your money mindset and your money traumas and all that stuff that's attached to your personal finances. You can actually put that to the side and simply go after the building itself. And so why did I want to stop everything and rephrase this and repeat what Peggy just said? Because that is very powerful for you. A lot of us, we keep ourselves small because we don't think we're good enough, or we don't think that we're worthy, or we don't think, oh, I'm not qualified. Oh, that's for them over there, or maybe one day. But what if you can actually do this a lot sooner than you might think? So I'm so happy you said that, Peggy. Another thing she talked about was raising capital, right? Okay, I don't have $50,000 of investable assets, right? Meaning $50,000 that's loose, meaning I don't need this 50,000, meaning I can afford to have this 50,000 tied up for the next couple of years, right? I don't have that, Kat. Well, I'm sure you have someone in your family, people around you, strangers. Sometimes it's easier to do business with strangers, right? So I want to plant that seed to open your mind to see that, okay, all I need is the building to qualify for this. I also need to show that I can pay for this. Let me go and find some people with that like-minded mindset, right? That same mindset, and let's make some things happen. So I just want to invite you and challenge you to think bigger, right? To expand your mind. We talk about stocks all the time. Is the reason why we talk about stocks is because you get to multiply your money really quickly, right? Especially if you have a good market. 2020, 21, 20, 22 is okay. 23, we've had some good markets. This is the time to multiply your money to get you to the point where you have 50K, 100K, 250K. All right. Thank you so much, Peggy, for all.
Yeah, and you have to pay taxes on that money, so you got to make a little more too,
Yes.
like that. So, and also I saw Anisha had she wanted to get her hand up. I don't know if she figured that out yet, but after Sarah.
Okay, yeah, for sure. So we'll do Sarah and then keep going. Go ahead.
Hi, Peggy. Thank you so much for your time today and for all the wise words
Welcome.
you've shared with us. I am a complete newbie to real estate, and I am definitely, when I saw Kat's post, I was like intrigued, like, okay, I don't know much, but I know that all of her guests always give such good advice. And so I thought I would join. I do have two questions. Number one would be for a complete beginner. If you could give maybe 3 next steps in terms of just moving the needle in some sort of way, what would that be?
Well, one is to save your money and pay yourself first. And if you're really interested in investing, is to look at your budget. And I don't know if you have a budget spreadsheet that you fill out, but you should be doing your budget every year and looking at where you're spending money. My accountant, which drives me crazy, wants receipts on every dime I spend, whether it's cash or going to fill up with gasoline. So I get my receipts for everything. I take pictures of them. I get them in my QuickBooks. And so it makes it really easy for me to look at my budget and see exactly where all my money went. So the first thing is know exactly where all your money is. 2, pay yourself first. Whatever you've decided you want to put away, if you could put at least 10% of your gross away. So I know when you get your paycheck, it shows all that money that came out, but the first number is what your gross was. If you could put at least 10% of that away, that would be really good. And you've got to put it someplace where it's going to make money. So where it can make money, if you have a savings account, the bank actually compounds, even though they don't pay very well, they will compound that. If you have a whole life insurance policy where there's a cash value and you're paying your money into that, that also compounds it a little bit better, as 4 or 5% right now. It's my understanding. And I don't know if you know what compounding is, but compounding is, you do, everybody knows compounding, okay. So your interest becomes part of your principal, and it's earning interest. That's the simple way. So that's saving. And then you might consider getting another gig that'll make a little bit more money so that you could have that money for investment. And then the other thing is to build relationships with people so you could put something together so you can make a better investment. The thing about real estate, which you don't get in stocks, and I know a lot of you are in stock, and there's nothing wrong with stocks because you could put less money in and maybe it could earn more, is you get tax breaks. And those tax breaks give you an advantage, and it writes off against it's called passive investing when you invest like how I invest now. And the income that comes in and the depreciation that comes in writes off any of your passive investment. So it gives you this tax advantage. My income tax this year for my personal was 0 because I have all these things that I can write off against. So you want to look at how you could put yourself in a better tax position. Was that helpful at all?
Yes, that was super helpful.
Get
And
a side gig.
I
Build
love it. Yes.
relationships. Really, look at all of you. You're all here for the same reason. Do you guys speak to each other in between your meetings? Do you
We
have?
should.
good.
We should.
You can, and I have a
yeah.
show. Look, and if you want, well, my show is we have speakers come on, but every Tuesday at 5 o'clock Eastern time, we have a speaker come on, and you get to ask that speaker questions. And our speakers mostly have something to do with real estate in one way or another. So you can ask them questions, and you can learn more there if you'd like. Then you could go back to Katiana and ask her. She'll guide you. It's what she's here for. Like that.
Thank you so much.
You're very, very
definitely-
welcome. Anisha, you had a question?
I did have one more question, if
Oh,
that's
I'm
okay.
sorry, Sarah.
Yeah, no worries. My second question is, so I just started working, I would say, in the corporate world, and so now I am familiar with, like, I guess the 401k. And you've mentioned how a Roth IRA is so much better. I guess, are those two things completely separate, or you mentioned like moving the money from one account to another? I guess if you don't mind just reiterating on.
So you're
maybe,
in 401k with your company. You go to your personnel department,
Yeah.
and say, do you have a Roth 401k?
Roth 401k.
Ask them if they've got the Roth, because you can put your money in there. It's after tax dollars. And then they do matching? And if they're matching, ask them, is that matching going to go into my Roth, or is that match? So you'll have to pay taxes on it, or is that going to go into my 401k? You want to find out. So you want the money you contribute. Most companies say if you contribute 3 or 4% or 7% or whatever it is, they'll match it. Right? So you're going to put your, let's say it's 5%. So 5% you get based on your salary. You put that into your Roth. Now they're going to match that 5%. Is that 5% going to go into your Roth? Because you'll have to pay taxes on it this year. Or is it going to go into your 401k where you'll have to pay taxes on it later, or roll it, or whatever? So you want to pay taxes sooner rather than later.
Okay, so you would say like you want they'll ask you those two questions and you want to pay the taxes like basically now versus later.
Right, because every dollar it earns, you're going to owe taxes on.
Right.
So you're gonna
Okay.
owe more later because you're gonna have that earn, right? It's gonna sit in a savings account or it's gonna be invested in something that's gonna earn money. Now you're gonna owe more taxes. So
That's true.
don't owe more taxes, owe less taxes. And a lot
Okay.
of companies are offering the Roth now.
Oh, wow. Okay. Yeah, I'm definitely gonna look into that.
Okay, good girl.
Thank
And
you so
find out what
much.
other,
I-
find out what other benefits they have. They might have a life insurance policy too. Look into that if they've got it.
Okay.
I wanted to interject in there really quickly. Sarah, I wanted to make sure, were you asking about the 401k versus the IRA for your stocks, or were you asking about that for your real estate?
Oh, I guess it's for stocks. I didn't know there was two separate ones, whether it's real estate versus stocks.
It doesn't matter.
It doesn't
Oh,
matter,
okay.
but I just wanted to know what you were asking. Were you asking for your stocks or were you asking for real estate? That's what I'm asking.
Oh, I mean, I haven't dug into real estate. I guess I was just asking because I know my job provides the 401k.
Okay, gotcha.
And so that kind of made me think, well, should I look into switching over because of that, of what she mentioned?
Yeah, I would speak to your financial advisor to be honest with you, because Peggy is in the commercial real estate space. So she's
Yeah.
able to give you general information, but before you make that switch, just like that, I would definitely speak to an advisor of some sort to make sure that you're on track to get to your retirement and everything's on track before you just kind of blindly do that.
Okay, so the
Okay.
Roth and the Roth 401 and the traditional 401 are the same, one's after tax and one's before tax. And here's the
Right.
thing. If you're, Tatiana, sorry, I'm gonna do this. If your tax advisor says, oh no, you need that tax deduction, you ask, how much of a tax deduction am I gonna get? Because are you gonna get $2.41 or are you gonna get $2,400? I wanna know what difference it's gonna make. Because it might not make enough difference for you to go into a 401k and have to pay taxes later when it's only $2 or $200. And then later when you go to pay, it's going to be $800 of taxes. So bring that up and ask them. If I pay taxes now, what's the difference going to be when I have to pay taxes in the future when it's earned 100%? They never answer that question. So you have to make them answer that question.
Oh, wow. Okay.
Curious about that.
I think there was a little bit of, because I'm over here, I'm a third party listening to this, right? There was definitely a little bit of loss in translation there because you asked about an IRA and a 401k. So that's what I was talking about. But what Peggy is saying is a Roth 401k is the same exact thing as a regular 401k, except you pay the taxes up front with the Roth and never have to worry about taxes ever again, right? But with the traditional 401k, which is the one you probably already have, right? You pay taxes later. So what Peggy is saying is you want to call your human resources department and say, hey, I'd like to know, do you offer a Roth, ROTH 401k? If the answer is yes, Peggy is saying, please take advantage of that so that you could pay your taxes up front. Now, when you step into the IRA world, that's a whole different world, right? That's not a company-sponsored retirement plan anymore. That is an individual retirement arrangement, right? That's for you. So I just wanted to clear that up for you, Sarah, because you asked about IRAs, okay? And I just wanted to make sure that we're not switching your 401k to an IRA. We're just switching from regular to Roth. Does that clear it up?
That actually is crystal clear now because
Okay.
you were spot on with like what you were thinking and what I was thinking.
Okay, good. You're just
Thank you
dealing
so much.
outside the company right now.
Yeah.
You know, you can also open your own Roth. You can have a personal Roth, which is not a bad idea because you can put up to $6,000 or $7,000 into it every year.
You're talking about the 401k or the solo?
Just a regular, just having your own Roth.
Yeah,
it's savings account.
Yeah, it's up to 7K now. They changed it, yeah.
Did they? Yeah, they keep changing it, which is nice, except I don't know why there's a limit on it. Why can't you put $20,000 or $30,000 into it?
Government.
Yes, okay. Anything else, Sarah?
I think for now, no. Thank you so much.
Okay. Anisha, you had a question?
Yes, they pretty much asked all the ones that I wanted to hear, but the one that just came up was so with the Roth 401k, that's just with your job, and you're saying that's separate from an individual IRA. And there's no with the Roth 401k, there's no limit on what you could contribute.
Oh,
Is
yeah,
there a limit?
there's always. Now,
Oh,
not necessarily in a 401k, but in your personal, there's a limit. I don't
okay.
know whether
It's
that's
7K.
combined. Actually, I didn't think about that. I don't know if it's combined. You could only put 7,000 a year in, but I don't think so. I think your 401's treated separately.
So a 401k at your job is 20K. For the personal IRA is 7K.
Okay, good.
Mhm.
Ooh, that's good. Yeah. So you could save 27,000 a year.
Okay. Well,
Okay,
that was it. You
good
guys
question.
did all the other questions, so thank you.
You're welcome. Great question. Thank you. Valerie.
Yes, hi. My question is, actually, I live in Canada, and I was wondering, like, as Canadian, when we decide to buy a commercial real estate in the US, do we have to pay taxes in the US and Canada, like in both countries, or is there like a special category for us?
I don't know enough to answer that question. I know Canada will collect taxes for sure. You could do a 1031 in America and not have to pay taxes. And if you sell, you'll owe taxes. But if you do a 1031, you won't owe taxes. But Canada, when you bring the money home, and I could connect you with Canadians who could answer that better than me. But do you have a CPA in Canada?
No, I not in the commercial real estate. Actually, I'm new, so no.
A CPA is supposed to know about commercial real estate and regular real estate.
Oh, okay.
Canadian law. So your Canadian law is different than American law.
Mm-hmm.
So what you want to know is if you would you be allowed to do a 1031 in the United States and not have to pay taxes in Canada?
Okay. CPA, you mean accountant?
Yeah.
Yeah, an accountant.
Okay. Yeah. I do have an accountant, so I can ask.
Okay, yeah. So talk to your accountant. Sorry, here they're called CPA. What are they called? What's that CPA for?
Certified public accountant.
That's it. Is that right? CPA, public accountant.
Okay, all right, I'll ask my accountant.
Yeah, I'm sorry, I don't know enough about Canada, except that they like to collect taxes on everything.
Yep.
Yep.
All right, thank you.
You're very welcome. Marie?
Hi, can you hear me?
Yes.
I've been working with Katiana for a while, and I did raise some money from an IRA that I have, and I also have a regular brokerage account. So I do have some money in there. So are you saying that it's better to use the money in the IRA to do a commercial deal as opposed to my regular brokerage?
I was talking about a Roth where you're not going to have to pay taxes if it's in a regular, no matter which it's in, whatever capital gain is in there, you're going to end up owing taxes on it. So it doesn't matter which you do it from.
So I'm thinking, I'm thinking my IRA of rolling it into a Roth and then use that later. Is that okay?
But
'Cause
talk to your tax advisor about that, because if you have $100,000 and you roll it, you're going to owe taxes on $100,000. So we do it over years, right?
Okay. And my second
And
question,
remember, when you go to roll money, you can roll for this year all the way through April. You could roll for 2 years in a row. So you could roll this year, and then at the beginning of next year, you could roll another, whatever your tax bracket is.
Okay.
It's not limited to your 7,000. It's called a backdoor. So
Okay.
you're rolling into, do you already have it set up, your Roth?
Yes, I do have a
Okay.
Roth set up. But I had I'm contributing to both, and I guess I should have just been doing just the Roth.
Right, because the Roth is after tax dollars and the others, you're not gonna pay taxes till you take it out, so. Yeah,
Okay. Okay. And my other question was, negotiating a commercial property. I know you were saying how you have access to those. So would that just be going through a realtor or just looking up your a local real estate person and getting that start? I'm just trying to figure out how to get into that world right now as far as commercial, because I was looking before today, I was just thinking about a duplex and a triplex and a quad, but hearing you, I'm like, okay, especially since it sounds easier to get a commercial property because I don't have to qualify for myself, just a
Yeah,
property. I'm
it'll
looking
depend
into.
on your experience too, as to what
Okay.
your rate is.
Okay.
There are real estate agents who work with investors. So you want to interview real estate agents, you want to find a couple that will work with you as an investor.
Okay.
There's real estate agents, they don't get it. You'd be surprised how many real estate agents have no idea about their product. One is you want to ask, and here's the thing, if you have a real estate agent that's also an investor, then that's your competition. So you really might want to find a real estate agent that doesn't actually do investing, but it doesn't matter because they don't always have, and they could be your partner. Remember, a real estate agent that's an investor could be your partner. They might put their commission into the deal.
Okay.
So, where do you live?
Thank you. I live in Maryland, and
Okay.
there's a lot going on here.
Oh, yeah.
Yeah, there's something that I'm looking into. I don't know if anybody knows about this dollar program. I'm trying to see what's going on. You can get some properties in Maryland, and I'm looking
Oh,
into.
yeah. I did hear about that.
Yeah.
Go get them.
All right.
Go get them. And before you close, if you want me to look at something, I'm happy to do that. I don't want you stepping into a hole.
Okay.
Okay?
I will definitely do that.
Absolutely. Yep. When you're just starting off, you got to have somebody that you can run things by.
Okay. Thank you for that, Peggy.
You're very, very welcome. I'm so thrilled I met all of you. Any other questions? Comments? Okay. I will send send to Katiana. I'll send you the brochure. Didn't I send you a brochure previously?
You
You can
did.
send that out to everyone. That hasn't changed anyway.
Yes, yes, yes. So I do have a couple of questions, just to kind of
Okay.
clear up a few things. If
Thank you.
everybody already went, and if you have questions that pop up, while I'm talking, go ahead and ask them. Sorry, I'm trying to multitask here. Okay. So the first question, I noticed there was a lot of questions around this IRA, 401k, solo 401k, all of that. It was like 4 or 5 back-to-back questions around it. So it seems that this needs a little bit more demystifying. So I'm going to ask you, can you walk us step by step? I found a building, all right, and it's got 300 doors, okay? 300 doors, the deal looks great. I came to you, you say, Kat, I love this, put your stamp of approval on it. How do I go about putting that under a Roth IRA?
Oh, well, that's pretty simple, actually. You fill out the documents with your self-direct. It has to be self-directed. It has to be self-directed IRA. So your money has to be in self-directed, and they have forms you fill out, and you fill out the form.
Okay.
And they sign off on the form. Your bank, you have to make sure your bank will do the loan. It has to be a so here we are, loan. It has to be a non-guaranteed loan. Right now in commercial, the lenders want you to guarantee the loan, but if it's out of your IRAs, they can't require that. It
Hmm.
has to be a non-conform, not called non-conforming, I'm sorry, just slips my mind right now. So it's not a guaranteed note.
Okay, so it has to be a special type of loan, basically, that's what you're saying.
Yeah, it's just a non-guaranteed loan.
Okay, got
Right
it.
now, like there's guarantees, like I'm signing on a loan on a drug rehab.
Mhm.
And I am requiring that the owner of the company put the money for the first year into a special account.
Mhm.
Because I'm not going to be responsible with having to come up with $70,000 every month. She's supposed to do that. So I want to pull that 700,000 for the first year and put it into an account that will pay that mortgage. So one, she doesn't have to worry about it. And two, I don't have to worry about it,
Mhm.
for instance, but it's guaranteed, which means I am personally responsible to pay that,
Mhm.
right?
Ah, okay, okay, thank you for that.
Okay.
And so a lot of questions were around maximum contributions, 7K. I was putting a little bit into both my Roth and my traditional. All of these were stock questions, right? Because with stocks, you could, if you want to invest 50K a year, you can't put all that in a Roth, right? You can only put 7K of it. The rest has to go somewhere else. Is that the case with real estate? Is there a cap on how many properties I can have under my Roth IRA?
I got $1 million in mine.
Okay,
A whole
beautiful.
bunch of they're all in different, but I had the money there, right? So I put my $100,000 into something, and then it made some money. So that money came back in. Then I turned around and invested it in something else. The whole idea is to grow your Roth. I didn't start off with that. I started off just like, actually, when I started mine, you know what the contribution was annually? $2,000.
Wow.
That was the maximum you could put in. So I've had to work my tush off to build a Roth account because of the low amount. And then when I found out about the traditional, I started rolling my money. I actually rolled the deal. You could actually roll the deal. So I'm in, let's say, a self-storage. So I have we'll say $100,000 put into a self-storage. So one year I roll 50,000, and then the next year I roll the other 50,000. If that kept me in that bracket, otherwise it'd be like 20 or 25,000. And I do it over 4 years, and then it ended up in my Roth. So I did it a little at a time because I didn't know, you don't know what you don't know.
Right.
Because the government's not going to tell you, they don't want you to know. Same with the right now, and it's come out over the last 3 or 4 years, is the whole life insurance policy. They call it infinity banking, but there's whole life insurance policies that actually you could put your money into it. You could actually put 100,000 into it. They call it overfunding it. And now you could borrow $90,000 back. The 100,000 is going to earn at 5%, we'll say. Right, so you get your 100 and whatever it is, $5,000 a year, however you say that number, right? But you borrowed against your account, and you took 90,000 and you invested it in something else. Now you're double earning. That's compounding. How could you do better than that? It's earning like the money's still sitting there, and yet you've got that money doing something else. Now you could owe that 5% back, so you need to make sure that you're in something that's 8, 9, or 10%, because you got to make it worth your paying that back, so that when the money comes back, you can pay that loan off. And now you've got more money in it. Then you have to pay capital gains. So if you did something and you earned 20,000 on that 100,000 you put in, then you're going to owe capital gains on 20,000.
Mhm.
So there's still, the government's going to get their taxes.
Right.
Right.
And what about the cash flow? So these 300 doors are giving me cash flow every month. Where does that go into? Does that go back into the IRA?
Right, you're not allowed to touch that money.
Okay.
So here's how the IRAs works. It doesn't matter if it's self-directed or otherwise. You have to be a certain age before you can touch it. So that's the reason we like the infinity banking and we like the Roth, because the infinity banking, you can borrow from that anytime.
Time,
Let's
yes.
say the car needs to have a tune-up or something and you just didn't have enough to put into your savings. You could go borrow, you know, $500 from the account and get your car tuned up, right? You can't do that from your Roth IRA, from your IRA. You can't borrow that money from your IRA.
Mhm.
You have to be 55 before you can take any of that money.
Yeah.
And then your Roth, you have to have that for at least 5 years or they come back in and I don't know, they have stupid rules. I've had mine forever, so I don't even think about that. So that's why I'm suggesting get your Roth now. Make sure you've got your Roth now so that you've got your 5 years in for whatever reason they come up with that you can't have a Roth. But they're doing it for older people who end up losing everything. We don't want anybody to lose. We want you all to have money put away so that you could start a foundation so you can make a difference in your community. Really, that's what it's all about. The reason you want to get there, and you don't probably even recognize that yet, because you don't have enough there yet, is that one day you want to make a difference. And how you make that difference is to make more money. And the way you make more money is to come out with, you know, a side gig or whatever it takes so that you got money that you can, that was working for you to make more money so that it keeps growing and growing over the years. And that one day you say, wow, I could make a difference somewhere in my community. I could set up something where kids could go to school and get a better education or whatever it is, donate to Rotary, donate to Kiwanis or something where you can make a difference. Sending a kid to school, sending your cousin's kid to school. Oh, bring them into some meetings like this. You know, have the whole family learn about money. See a hand up.
Yes.
Ramon.
Ramon. Thank you, Katiana, my queen. Thank you, Peggy. So, Peggy, if I decided to, let's say, for example, if I already have a business, okay, can I use that business and then open a Roth IRA underneath it and then start buying commercial property under that business?
I know you can do, you need to speak to your CPA about that. I know you could do a 401k and you could put up, I don't know, 67,000 or something like that in it. EQRP could help you with that.
You know what I'm
But
trying to say?
I don't know that you could do that with a Roth.
You can't, Raymond. Yes,
So-
the individual, remember the individual retirement arrangement is individual, meaning that's your personal. It cannot be tied to the business. The business needs its own retirement account.
So in
Right.
that case, okay, so how can I mean, what are the steps that you just mentioned so I can, benefits, that's the word, benefits from, so I know I need some cash, okay?
Oh,
And
yeah.
I already have like a Roth IRA,
The
was
only
that
thing you can put in your 401k for your business is cash. Now you can take that cash and invest it in other things, right? So that's going to stop you from having to pay taxes. So your company, I don't know what it makes annually, but if you talk to a company like EQRP, they actually work with companies like yours. They work with the small companies and they will help you set up an IRA that your 401k where you could put your money in there and then you could take that money and invest it any way you want. And you could take money back and use it for your company. So you get the tax deduction and then you could take the money and use it again, or you can invest it in real estate or whatever you want and it will grow, but you are in a taxable position. They don't have a Roth or they don't do a 401k Roth that I know of. That might have changed. Maybe EQRP could help you with that, but they're the company that works with businesses.
So in your case, I mean, I have to have my own capital, right?
Company will set up your company, you want your company to
No,
contribute.
and your no, from what you explained before.
Mm.
So in
Yeah.
order for me, so do I have to come up with my own capital, my own cash, so I
To put
can
into your
buy?
to put into your Roth IRA?
No, 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 no.
No, to work with you, Peggy.
No,
Oh,
to buy a commercial, okay, a commercial property, right?
yeah, if you want to buy something yourself, you would find a good real estate agent that works with investors. If you want to be a passive investor, you could call me and we could talk about where you could put your money. But yes, you have to have cash and it could come from anywhere. Nobody cares where your money comes from, just as long as you have money.
Yeah, I wanted to interject here as well. I actually was going to ask, that was going to be my next question. So it seems like there's also, Raymond, I'm going to actually ask a question that might clear this up. You can raise your hand again if it's not cleared up, okay? So the second major questions that I've seen, right, throughout the group here is, it's not quite clear to the group of how to work with you. So let's go back to my example, all right? I've gotten, this time, I didn't find my own 300 doors, right? I need 300, I'm looking for a deal. I've got $100,000 cash. It doesn't have to come from me. It could be from my families, everybody, from my cousins, from strangers. I raised this money. I have $100,000. It could even come from equity in my house. It could come from equity from my stocks, from my crypto. It could come from anywhere, but I have $100,000. And I knock on your door, Peggy, I've got $100,000. What's next?
What is next is we learn more about what you want to do with that 100, how you want it to grow like that. And then we show you what we have, what the different sponsors are that we work with and what they have.
Okay.
We don't do any of the real estate. We don't work with real estate. We don't work with agents. We only work with the syndicators, the sponsors. They bring their deals to us. They have, like, we've got this group, they've got 600 units right now they're raising capital for. They would, and that's the 100,000 they would like. And then you would be invested with them. And me, I'd probably be invested in that also. And you would know that it's going to be 2 to 3 years before you get your money back, for instance. And you're going to get your 20% a year, or you're going to get some cash flow or whatever it happens to be. So you just contact me either through LinkedIn at Peggy Beauregard, or you could come to my email, Peggy at the Nest Egg Builder, and set an appointment. I have a calendar if you want to use that. And we could have the conversation. So it's always a conversation. You come to me with $100,000, but I want to know you and learn about you and your family and what your goals are and how you expect to get there. And it's like, we like to develop relationships. We're very careful about that. We want to make, you come to me with 100,000 and that's all you got. We're going to tell you, we don't think you should put $100,000 into this deal if that's all you got.
Right. So this needs to be free money that's available.
Yeah,
we tied up for a while.
Want to protect you, right? What if the deal goes bad and you just lost everything and how long it took you to get there? And yes, can that happen? Yeah, look at the stock market. It goes down and you've just got to double just to break even. So you want to know that the thing about real estate is, even if that were to go, it doesn't usually go down. The cash flow might stop. Some things do change and things do happen, but you're still going to get your K1s and you're still going to get write-offs, and you're always going to have a value there. Property is always worth something. Always worth something. So it could be 5 years before your money comes back. And you could be a lender, and I could talk to you about being a lender also, because this business, it sounds simple. It's not simple. It's complicated. You need to be well educated. We believe it's important you get educated. Katiana believes you need to be educated. That's why she's doing this. And that's why she invited me to come, because we both feel that it's really important that you're protected and that you know what you're doing. Like when you go to work with a real estate agent, you got to make sure you got the right real estate agent. You got to ask the right questions, and you got to make sure that whoever you end up working with is going to protect you and make sure you do well, because, you know, they want the commission. We want them to take care of you.
Yeah, for sure, for sure. Thank you so much for clearing that up. So just to clear that up for everyone, if it wasn't clear, so Peggy is well connected. So someone asked, how do you find your 300 doors? How do you find your buildings? She says, they come to me, right? So she's been in the industry for 30 plus years. So she's well known. People throw deals at her. So when we talk about deals, we're talking about opportunities, projects, right? Here's a building, here's a hotel, here's a public storage unit. That's how she gets her deals. And what she does is she analyzes all of those deals for you, right? She does the due diligence for you. And you come to her and you say, I've got X amount of money that I'd like to invest. And she shows you all the ones that she likes, all the ones that she believes in. You decide which one you want to go into. Bada bing, bada bang. Did I explain that correctly?
I love the big, but I still
Yes,
can't do that after
ma'am.
I've watched that movie 100 times.
Yes, yes. Okay, beautiful. Let's go in the chat here. Doslene said debt servicing credit loan. I think she was referring to the loan that you were talking about, the non-guaranteed. Was it debt servicing credit loan? No.
Debt servicing credit loans, debt servicing. I'm not exactly sure what a debt servicing credit loan is.
Doslene, did you want to clear that
I
up?
was just wondering if that's what you were referring to. So if you don't know, then I guess it's not.
A debt's a debt.
Yeah.
Has to be paid.
Mhm.
So what I was talking about were bank loans when you're
Mhm.
like right now I'm qualifying for this drug rehab for a $5 million loan, and they want a guarantee on it. I have to guarantee that I can pay that loan. So is there servicing? Well, there could be a servicing company on it. I don't know. We haven't closed escrow yet to know if there's a servicing company, but the debt, they still have to get paid one way or the other. So there are servicers that are used basically on regular mortgages on homes, but not usually on commercial. Commercial, you pay directly to the bank or to whomever you borrowed the money from.
Okay, thank you so much for that. Thank you. Vianard asked, is Nest Egg Builder like a REIT? That's a
We
good
are not a REIT. A REIT, well, a REIT's like a stock. A REIT is a real estate investment trust, and they buy a whole bunch of properties. And there are private trusts, and then there are the REITs that are through the stock. If you go into the New York Stock Exchange, I think is where the REITs are. But no, we're not. I just invest myself. I personally invest in different deals. You
Yeah,
could say I have my own REIT because I have a portfolio of properties, but I wouldn't call it a REIT. A REIT, that's a company sets themselves up and they go out and they buy a bunch of different properties. That's what a REIT is.
So remember, Vianard, she finds the deals for you and you are directly investing in that deal versus a REIT where you're putting your money in a pool with other investors and then somebody's managing that money. Okay, it's a little bit different. So this is what we would call a direct investment. Yes, go ahead. Sorry, go ahead.
Yeah, you're still directly investing with the sponsor.
Yes, with the sponsor.
You're not investing with me, you're investing through me to the sponsor. A REIT, it's more like a fund where they go out, they collect the money and then they go out and they buy the properties. And then they have to pay you. So a REIT's handled very differently. A REIT, they have to pay 90% of the profits back to everybody. When you're invested in a single property, like the 300 units, you get your cash flow as the cash flow is available. Does that make sense?
Mm-hmm.
You're just in one property. And a REIT, you're in a pool of properties.
Right. I think that cleared it up. Right. And the REIT, you have to go through the stock market to be able to go through a REIT. So
there are private REITs.
Yeah, oh yeah, that's true. That's true. You're right. You're right. The ones that they're exposed to are the ones through the stock market. Yes.
Yeah, right.
Absolutely right. So I just wanted to ask this one last question, and then we do have to close at 8. I hope you're okay with that. I see somebody's hand was up, Robin.
Yes, Cynthia.
Oh, Cynthia. Yes, your daughter's name. So one last question. If you can walk us through a case study, like an example of, and if you could walk us through from the beginning process all the way to the end and what the profits look like, because I'd like to paint a picture to show everyone what is possible when you do get into commercial real estate.
Well, I can do a presentation for you if you like.
Do you have time? I mean, we can
Well,
go
now,
into-
no, not now.
Not
I mean,
now,
it takes
okay.
About 20 minutes to go through the whole thing, so I could show you what the executive plan looks like and go through what they're showing you on the executive plan, but I could put something like that together. But basically what you want to know is what's my return?
Mhm.
First, who are these people? And which is always at the bottom of the executive plan, but who are these people? How much experience do they have? What kind of return am I going to get for the money I put in? When am I going to get that return? And am I going to get all of my money back? Or am I going to get partial of my money back like that? And then when am I going to get all of my money back?
Mhm.
So what you want to know is what's their experience and how much do they require that I put in? And do I have to be an accredited investor or a sophisticated investor? And then how much money am I going to get returned? So if you put $100,000, am I going to get an 8% return? Am I going to get a 10% return? And then when am I going to get all my money back?
Mhm.
Those are the 4 things you want to know.
Yes. I hope everybody wrote that down. Very, very important. Okay. So when she's saying about who are these people, remember, you're finding these buildings, these commercial properties, these manufacturing plants, the warehouses. That's what I was thinking about. I'm thinking about like back roads, right? Those warehouses, those public storage units. You find one, you want to do your due diligence and ask, who are these people, right? What is their experience? How much money am I going to make? All right. And when am I going to get my money back? Did I say that correctly?
Yes.
Okay. Beautiful. Beautiful. All right. So we'll take that last question from Cynthia and then I'll let you go because thank you for staying a little bit longer because I
It's been
told you an
fun.
hour.
I actually
This has
was
been the
going
best
to
part of my
ask
day.
exactly
Yay, I'm
that. I was
happy.
gonna ask for, wait,
Who was that? Sorry.
I
who
was
is-
actually gonna ask that exact same thing. So,
Which one? Sorry. Go ahead.
no, I was gonna ask what was already explained. What you asked, I was gonna ask the same thing, not the exact same thing, but partial. So that question already is answered.
Oh, great.
Okay. Beautiful. Beautiful. Awesome.
All right. And I'm on LinkedIn and I'm happy to set up an appointment if you want to have a further conversation.
Yes. Yes. Yes.
And if you want me to come back and do a executive plan and show you what it looks like to go over it, I could do that. It'd take 15 minutes, probably 10 to 15 minutes.
10 to 15 minutes. Okay, so beautiful. So I'll reserve that for those who are part of the private wealth circle. So I have a mixture. I have some of my past clients that I worked with in the past and some of my active clients who are part of our wealth circle membership, which I told you about.
Right.
And so when you come back, I'll reserve that specifically for the wealth circle
Okay.
community.
Yep.
Yeah. So
They're all
that's-
your clients as far as I'm concerned.
Yes, yes. Awesome, awesome. All right. Thank you so much, Peggy. Any last words that you want to say? Any last comments, observations? Go ahead, take it away.
I really appreciate you all being here and listening and the great questions you had. And what I say is go make more money and make a difference in this world.
Yes. Yes, yes. Thank you so much. Thank you. So that's it for today, guys. Have a great night. And those of you in the wealth circle, actually, before we go, if you guys can just type in something super, super simple that your biggest takeaway from tonight. Okay. What was your biggest takeaway? And I'll go first while you guys are typing. Okay. Actually, let me pin myself here. So I had a few takeaways here. I already kind of talked about it, but raise capital. Peggy, you got me. Like, let's raise this money, okay? I'm going to be raising some money. So I'm going to knock on a few of your doors and we're going to get into some of these deals, okay? It's easier, right? The commercial, that just like, just opened up something. I knew that, but I didn't know that. I didn't get it. But when you said it, right, the commercial property itself has to qualify for the loan. That just opened up a lot for me, okay? Let's see. I think some people are writing, okay? Let's see what everybody says. Oh, somebody said the same thing, okay? Make more money to make a difference. Absolutely. Easier to qualify for commercial loan. Yes. There's a whole world of investing that I need to know about. Look at that. You're already inspiring other people there. Oh, this was so much fun. You're so brilliant. Great questions. That's you, Peggy. Don't pay more taxes than you have to. Yes, 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 yes. Beautiful, beautiful. All right. So thank you, everybody. Have a great night. Peggy, we'll talk. Is it okay if I text you right after?
Sure.
Sure. Okay, I'll
Thank
text you. We'll talk and be blessed, everybody. Thank you.
Thank you.
Bye.
Thank you. Bye.
Bye-bye. All right, everyone. Thank you for coming. Have a good night.
Thank you, Kat. Good
Bye. You're
night.
welcome.
Good night.
If you guys
Thanks.
have questions, text me. I got you. And I'm going to knock on your doors. We're going to raise some money. All right. Bye.